Hello, uh, what's up, YouTube family? I'm back with another video. Yeah, like you've seen from the title of this video, we banged 10k my Forex fund challenge. You know, so I wanted to show you first. Let's go look at the metrics, then we shall look at the trade breakdown. Yeah, the trade that was able to beat the challenge. Uh, this happened like on Wednesday this week. So we can see that it's a 10k account and it was passed. I did this in under 8 trading days out of the 30. So we had a 14%. you know I was in a bit of drawdown, but I banged it even way beyond the profit target. So it's important to stick to your trading rules and be calm. Whether you're in drawdown, there's like that one trade. For as long as you keep maintaining your discipline and your rules. Yeah. So we can see risk management. We can see that you know all the max daily losses were kept intact, and Euro USD was the most traded pair. Yeah. So let's get down to the chart, and we look at the trade. So actually it was a Euro USD trade. So coming from the 4-hour chart, we can see that we got a break of structure right here. So this break of structure is one that gave us price invalidated these lows, giving us a picture that we are still in a bearish trend. So at that point, we ask ourselves which zone was responsible for the break of this structure. So we go to the daily, and we could see that we had liquidity. You know, we had this as the institutional candle. So we go to the 4-hour and map out. We go to the 4-hour and map out the zone that is responsible within the daily liquidity. So we could see that we had this supply zone, fresh supply. You know, so at this point, what we're waiting for is to wait for price to come into the zone. So we can go to the 1 hour and monitor price. I actually took this basing on the 15. So on the 1 hour, we created a low here, you know, and it was much more clear on the 30. So looking on the 30 minutes, we had a change in trend. You know, this was not the usual one because usually we take on the 1 hour. Uh, the approach here was we got a break of this structure, which indicated the change in trend. You know, but the 1 hour was still looking bullish. So it was tricky to go in for a trade. The other second sign we got was these equal highs. So price failed to break these equal highs and it had printed a new low. So at this point, we were monitoring for a break of structure here or a break of structure to the downside. So on the downside, we had price break these lows, get a pullback, and break this low. At the point of this cross, this is where we took the trade. So we can now hover to the lower time frame and observe, knowing that price had already mitigated all the liquidity up here. After this break of structure, we knew there was no more liquidity up here too. There was no more liquidity to be collected. So we got in here, got in at around this point with a 5 pip stop and risk reward of 1 to 7. Yeah, I got out at around this area. As soon as I was risking 2% on this particular trade. Yeah, so that's how we banged Euro USD. So currently I'm on to verification, and yeah, I'll give you guys an update. I'll make a video about that. Yeah, yeah. So we can go over somebody. I was discussing with somebody in the comment section, and somebody reached out to me, and they were still inquiring. They didn't get the strategy clear. So let me throw more light on that. For instance, uh, we can look at this Euro USD. So first things first, you always want to observe structure. You want to map out the recent highs and the recent lows like this. This is what gives you direction in the market. If we haven't broken a high, like this is a high, but this high is not valid because it didn't break structure. So the recent high for this market is this one. This is the recent high for Euro USD. Yeah. If this had broken structure, this would be a recognizable high. But at this point, this is within this range. So for Euro USD currently, it is still a bearish market. This was a fake out. I know some people got in here for a buy, but this high was not responsible for any, it wasn't a trend. It was within this whole move. So at this point in time, we are waiting for a break of structure. If we break structure here, we'll be waiting for some sort of pullback before we continue lower. Yeah. So the whole idea of where the market is going is just based on structure. Uh, the best example I gave is usually on GBP USD daily time frame, because it has been clearly mapped out here. You can clearly see that every time we break a low, the market keeps coming back to mitigate. So we break a low and price comes back to mitigate the previous liquidity before going lower. You know, we broke these lows, price is on a pull to mitigate before going lower. And the whole thing has been happening. We can equally go back for the buys. We can look here and see that price kept breaking highs, pulls back, mitigate, goes higher. We break a high, pulls back to mitigate liquidity and go higher. And we can indicate this too. We get a push above, pull back to mitigate and go higher. Even on smaller leg moves within, we can see it keeps happening. So the most important thing you need before you need direction, and you get that from structure break. Yeah. So as soon as you identify your structure break, you get direction. We have a structure break. That means we are looking for a sell. Two, we are now going to look for our point of interest. Point of interest is the turning point of the market. Yeah. So firstly, we get direction. Two, we get our entry point of interest. Then three, we look for confirmation, a change in trend within the point of interest. Yeah. Bye, guys. Yeah. Enjoy your weekend.